When it comes to stocks, Filipinos are either scared or speculative. Money can be made or lost in split seconds in the stock market. So today, we'll find out how you can trade, invest, and win in the stock market. I'm Edric Mendoza, and this is On the Money. With us in this episode is Juanes Barredo, a technical analyst with 20 years of experience, which means he's a market timing specialist. Hi, Juanes.
Hello.
Welcome to the show.
My pleasure.
Yeah, so let's talk about, we will call today Stock Market 101. Why should a person invest in stocks?
Well, I think people who invest in the stock market are really gearing to be able to expand their portfolio of investments. Many times, it's very good to recommend that you have a basket of investment rather than only have one. And I guess one of the most prestigious and higher yielding investments really come from that market. And this is why it should be one of those things you would have in your portfolio.
Okay, excellent. Talk to me about like inflation and how that factors into the whole decision on making investments in this area, for example.
Okay, because the rate of inflation usually is a benchmark for you to be able to make above in terms of any investment you make.
Yeah.
If you cannot make more than what inflation takes away from you, then I guess that pretty much spells the sorry state of an investment. And it's nice to know that the returns in the stock market in the last 20, 30 years have been very much above that particular rate. And that's why people have considered it.
Sure. I mean, 2030, since you gave that time frame, approximately what have been the returns for that period?
It stands at about 14% a year.
Wow. Yeah. Really good compared to our 3 to 4%, depending on which benchmark on inflation, right?
Yeah.
Okay. And if a person were to invest, what is your general benchmark or rule of thumb for how much to put in? Do you have a guide?
I would usually recommend people to be able to make an assessment first of what they're capable of investing.
Sure.
20% of savings is quite a healthy amount to have in the market already. And for those who want to be a little bit more aggressive, maybe the more mature you can be, it shouldn't be as heavy as it would be when you were younger. Because the more mature you are, the more obligations you might have, and you might be financing. And that's why it shouldn't be as heavy as where you were younger.
Okay. Do you agree with the method of the 100 minus your age?
Yes.
Method
yes, of
for
course. Yeah,
stocks?
I guess it's a simple way of carrying that particular thing out. So 100 minus your age would be the percentage of your savings that you'd like to be able to invest in the maximum in the market.
Okay, excellent. Thanks, Juanes. Tell me about, people will say that the stock market rises and falls and dips. And through the years, you know, there have been fears. Why should a person still put their money in stocks, given that?
Well, the reason for the choppiness is really because of human emotion. It usually gets in the way. Some people, they invest, they get scared, they get out, and they don't realize that the impact on these corporations are lasting no matter what circumstance you have. And it's really looking at things in a proper perspective, being long-term, that you can try to ride on the success of these businesses.
Okay.
And that's what causes the volatility. But having a successful investment in the market has to really be on trying to be able to identify the companies well, staying with it as long as you can, and realizing the maximum profit.
Identifying the company particularly, you were saying, right? Is there a general guide? I understand there's an acronym you have, GEMS.
Yes.
Is that,
so this is something that we do to be able to try to be able to filter what kind of companies we would invest in. GEM starts with G, which means that we're looking for companies that are in a growing industry. E stands for companies whose earnings estimates are quite visible to us.
Earnings?
Yeah. Then, of course, M is management credibility. S, it has to do with having the right services or products. And the last S, our GEMs have with 2 S's, and the last S is really to have a very stable financial system in the corporation.
Okay.
So the businesses have all those ingredients, and clearly these are things that we would pick off for an investment.
Right. So when you see those things in place, that's a sign that, hey, stay with these guys.
You want to have.
You want to put them in there. Okay. Excellent. Let's talk about peso cost averaging. I hear you're a very big proponent of that. So why don't you help explain for our viewers again how that works and how it makes sense?
Well, as you introduced me earlier, you said I was a market timing specialist.
That's right.
And if people only knew how long it takes to get into that capacity.
How long does it take?
It could take several years of mastery to be able to get into a level where you know how to make an assessment of the market very well. And so we conceived of this particular program to try to be able to initiate people who are not too familiar with the market, an easy way in. Because
I like that. For people like me.
Okay. That's right. And I mean, with a few little pieces of information, you can get yourself started. Cost averaging is all about slowly putting money into your favorite stocks over time and not timing the market. And just doing it because you know that these are going to be consistent businesses that are going to be avidly growing, and you're trying to be able to make up much of these values over that significant period of time.
Right. And as you just keep putting, you're able to ride out the ups and downs of the market.
You wouldn't have to worry about, am I buying at the top or at the bottom? I mean, you're here to just accumulate little by little and getting a good average price into that investment.
Because there may be times when it's down, there might be times where it's up, but all told,
yes. Yeah. In fact, when you think about it, the people usually get scared when markets go down, but that's when you can get the best price.
Yeah, exactly.
And when prices go up, when everybody becomes ecstatic, is
that's
when
you don't want
to be buying too heavy at that price. And cost averaging automatically do that.
Exactly, exactly. So it helps ride out that whole trend. Advice, the 5 biggest mistakes that you think new investors make when it comes to stock market and investments like this?
Well, I think the biggest proponent to mistakes in markets are really based on emotion.
Emotion.
And that's the number one enemy, the killer.
Right.
And every time you start making emotional
Give an example.
decisions,
how does that translate? So, for example.
Well, like I said earlier, the tendency for markets, whenever they're climbing up much faster, tendency for that is to yank you to put more money in because of the excitement
it's going good.
Making so much money. Why not do this 10 times over?
Emotional. I understand.
And
and vice versa.
And vice versa.
Yeah.
And when things look scary is when you yank out the most amount of cash, when in actuality you could buy the cheapest.
Excellent.
Right? And
so emotion would be a killer.
Yes. And these are the, I guess, the preliminary factors that people have to slowly rub out. I mean, you can't be absolutely without it, but it's something you have to control.
Watch out for, especially. What else? So that'll be one.
Yeah, another thing that I guess we also want to make sure that you're looking into is you want to diversify your portfolio in any investment, not just the stock market.
Sure.
In the stock market, it's diversified when you start controlling the type of issues that you're buying, particularly if you can segregate it to different industries, not just one.
Okay.
So let's say, for example, because let's say if you happen to hit all mining companies and you have 5 of those, and a significant amount of that had fallen in, let's say, in the recent year. That would have been taken its toll on the value of your portfolio. Another thing that we can actually look at is also staying with what the trends are. Because a lot of people don't really realize that motions in the market have everything to do about what is in mode, what people like, and how they can try to make that assessment. So it's important to know what the trend is, particularly in the sectoral capacities as well. So if you think that mining is not too much in glamour right now, maybe you want to be able to control a very less portion of your interest in that, and stay with where money flows are going into. Yeah.
So diversifying even amongst stock options, etc. Okay.
And you can tell that including in trends.
Okay.
Well, we can also try to be able to make sure that stock picking is also a very key. Right? And here's where some work has to be done.
Yeah.
Clearly, some material, like you said, studying gems, for example, is a good way to be able to tackle that particular fact. Excellent. And at least knowing a little bit about your company before you buy it, because a lot of people in the Philippines would just buy any stock because of rumor, hearsay, newspaper
Do your own
articles.
homework, obviously, your due diligence.
You gotta know. It's like when you're buying a business, you want to know what the business is all about.
Course.
You run a business remotely, you can't get rich doing that.
That makes sense. I'm going to take a different tack a little bit and ask you. So let's say we have OFW viewers, right? They're thinking of putting money in the stock market as well.
Yes.
Can they apply the GEMS and the peso cost averaging principle in the countries where they're at?
Yes, they can.
Yeah.
I think very much more in their area because things are more visible to them. And they can see the companies, the state of their affairs, who's managing it, how is this company impacting the economy from wherever it is that they're living in. Today, online trading in various countries are quite open, and that can provide the necessary research and guidance. So yes, I would try to be able to push them to learn more about doing that in the countries that they are currently staying in.
All right, okay. Let's talk about people who are, I think we touched a little bit about on this earlier, but people who are about to retire.
Yes.
So do you advise that those gentlemen or ladies put their money into the stock market as well?
Well, you know, it's really funny that just yesterday somebody did ask me that same question, and I told them, remember one basic philosophy. every day that you are remaining not invested is one day that you can't make more money.
Well said.
And in that capacity to understand that there's no such thing as there being too late to invest. If you've just coming into the retirement stream and you still have, let's say, 5 to 10 years that you can keep your money secure and making money for you, I think that'll work out quite wonderfully to keep you going.
Yeah, they just have to factor in liquidity, I guess. I think we talked about that earlier.
That's right.
Not putting all of it in that particular asset class. Okay, you know we're going to have more questions for you in a bit. Juanes, right now we have to pause for a short break, so keep it here. On the Money, we'll be right back. Welcome back to On the Money. It's time for Salve Duplito's segment, Salve Says.
Just like other 15-year-olds, Anton Fausto likes dancing hip-hop, playing basketball, mathematics, and although he doesn't say it, of course, girls. He also likes investing in stocks. Anton and his two brothers have learned about financial markets around the dinner table, having been raised by parents Marvin and Rose Fausto, who are professionals in the finance industry. He has also been invited to speak in workshops on financial literacy for kids. Hi Anton, thanks for having us here.
Sure thing.
Okay, now can you tell us about your portfolio?
My portfolio has all my assets right now. It has my money in the small account or the ATM, and then most of my money it's in the stock market, and then another part of my money is in the easy investment program. Yeah, we call it the big account. I like investing because for me it's very practical. Since we know naman that everyone needs money, you and I need money every day, and for me it helps me in when I grow older. Since I already have like backup cash, I already can choose a career that I love instead of choosing a career just for the money. I started when I was born because it's something my parents, something they taught us while growing up. That became a normal thing, like reading or writing. We just talk about it casually. So when I was really little, that's when I started.
And how do you feel about being able to invest even if you're very young?
I feel like it's a privilege, but I think it's a privilege that every kid like me should have because it gives us all a head start in saving up our cash. That I think right now I'm already saving up for my retirement fund for when I grow up.
You are saving up for your retirement?
I think so. I don't really spend the money I'm investing now.
Okay, so what do you intend to do with that money or with your portfolio in the next 5 years? Have you thought about that?
Next 5 years, I'll still be in college. So I think I'll just keep making it grow and I'll just keep saving more than adding to it. Mostly just the stock market because since I don't really have any liabilities or any daily expenses like paying for a house or for my food, I just keep adding it to the stock market. I want to share that money isn't there just for you to spend it. It's there for you to feel safe, to feel secure, and that money isn't supposed to like run how your life's supposed to be. You're supposed to just use it to help you in your life. I think the discipline comes with especially parents, because they tell me that it's become like a normal thing with my brothers and I not to touch the money in our stock market.
Anton, I heard that you had a little business on the side, teaching hip-hop dance. Tell me about that.
Last summer 2009, my brother and I decided to teach dancing, hip-hop dancing in our house, since we both like dancing naman, and it's something we do for free, so why not make an earning out of it. So it was a whole family effort that my parents were the one to push us to continue it, and it was really hard. The whole thing was hard, especially the getting students, because we had to make posters, we went online, we called people, texted people. I even went around the neighborhood giving out flyers, yeah. And it was a great experience.
How much did you earn from it?
I earned enough to buy these shoes that I've been wanting to buy, but then there was no special occasion. It wasn't my birthday or Christmas, so there was no excuse to buy the shoes. So I thought, whatever I make out of this, I'm gonna use them to buy my shoes. It felt really great, because every time I wore those shoes, I would think to myself that I worked hard for these shoes.
Do you have any advice for other kids who want to start investing?
Yeah, I think you should just each kid should take it step by step, like every week, because I get weekly allowance, and I have this like treasure box that I put at least 20% of my allowance in it, even before the week starts, so I won't be tempted to spend it anymore. Then when it reaches to about 1,000 pesos, I give it to my dad to deposit it, and then when the amount in the ATM goes bigger, just put it in the stock market.
We need more than just another sermon on the mount on investing. So if you're still looking for the why, the how, and the what of investing, the story of this 15-year-old investment whiz kid should get you moving.
Still with us is technical analyst Juanes Barredo. He will answer some of the money questions you sent us via email, Twitter, and Facebook. Mel, what questions do we have for Juanes today?
Hi, Juanes.
Hello.
Our first question comes from Dominic via email, and he asks, are there any other guidelines on how to choose stocks other than only choosing from the companies that we know of? Are there particular stock trends per industry that we should know beforehand?
Well, yes, I guess we talked about a methodology earlier on to be able to make sure that the companies that you're going to be looking at have certain qualities of becoming a great business. We're not here to buy mediocre stocks. We're here to buy great businesses.
Right.
And in aspiring to do that, you really want to focus on making sure the companies are making money, they run well, very efficiently, without too much debt. And you want to make sure that the continuing processes of the services and the products are intact. And yes, you're right, trends are very important. If the industries are very strong, then try to go along with them. And you have all the time in the world to be able to go back to an industry that's not doing well anyway. So that's why we tend to park away from that until more aggressiveness comes back into the industry.
Okay, we have another question, and this comes from Janri via email. And Janri says, I invested 50,000 pesos in the stock market. Is that enough to be profitable? I currently have Meralco stocks. What are the prospects for this issue?
50,000 pesos is good to begin with. I always have to look at that as a portion of your savings. If it's only, for example, 1 or 2% of the total amount that you've managed to save up, then perhaps you might want to be able to nudge that up a little bit. We talked about 10 or 20% of savings is good enough.
Okay, that's great. So hang on to those stocks.
Oh, yes. Yes.
Okay, excellent. Do you have any other tips?
Nice, man.
I gotta ask.
I think
Get
that's
that
room for
in
another
there.
show.
Yeah.
What stocks should we be looking
Excellent,
at?
excellent. Yeah. I wanted to write on that and say,
I
so
know,
let's
I
take some
know.
notes here, Meralco.
Okay.
I guess the better way to be able to do it is just look at the basic principles of what a business stands for and see whether they can leverage on that.
Okay.
Meralco is leveraging on something that people need to use every day of their life.
Basic
and so
utility,
being a
yeah.
basic utility is very strong.
Yeah.
Manila Water Corporation, being another utility, is doing extremely well in the stock market. You could also look at basic services like telecom. You could also try to be able to make sure that infrastructure is also a big development, because the Philippines is banking on that.
Right.
There's quite a number of issues under those things.
Okay,
So
I'll
he's just
keep
giving some
that in
free tips
mind.
right there. So I was taking my notes.
Exactly. Okay, well, we have another question from Jaja. It was mentioned on your show before that there is always a stock market crisis every 10 years. Has there been any situation where losses reached more than 100%? Also, what does it mean to lose stocks?
The concept.
You're right. About every 10 years, there seems to be an economic cycle that is being followed in the Philippines. So our last bear market ended in roughly about 3 or 4 years ago. So that means that you still have a bit of the cycle inside here. So don't worry about things in the short term.
Okay.
And I guess, yes, we've seen big dips, but we've never seen the capacity for markets to wipe out 100% of your value, unless, of course, the company goes down the drain. And if you know your gems, if you know the kind of businesses you're buying, it's very difficult to get hit in something like that.
Okay, that's good to know. And she says, what does it mean to lose stocks? I guess that just means like
what you're doing
folds.
is when you buy into a stock, you're buying a piece of a company. We call that buying a share, and each one of those shares represents part value of a particular business. It's worth money. So a piece of paper that has value. If the particular company that you're looking at increases its ability to generate more money, then it becomes more valuable.
Right.
And the more it can do that, and the higher the price people will be willing to pay for that particular stock. Now the inverse happens. Let's say the company starts making less money, or perhaps the medium-term future is not looking too good, then people tend to sell that first because they would rather pick another company that is doing more excellent job at recreating that profit. And so what happens is the price of the stock will adjust downwards because more people are selling.
Right.
Yeah. The movement in the market is determined by demand and supply.
Yeah.
Right.
So if more people want to sell,
Right.
lower
So
the
she's
price
not
will go.
losing stocks, just losing value.
You're losing value, but each stock has its own intrinsic value, right? And so hopefully that in time, if you can just hang on to it and not liquidate it, that you might be able to redeem, if not even make more than what your current value is.
Okay. Okay, we have another question from Eugene, and he asks, I only started investing in the market this year. I bought select blue chips, but have not sold them yet. I've seen how some third liners move. Any tips on how to trade them?
All right. First, I would suggest that blue chips always be the entrance into markets because they're more stable. The earnings flow are good. Your ability to move in and out of them are very, very easy because of liquidity considerations. Third liner companies are more difficultly traded. Their volatility, in other words, the way the prices move, can be extraordinarily substantial on the upside, but they can do so on the downside. And so I think anyone who is moving into that must be mentally and emotionally prepared to be able to handle such volatility. And they really have to know that the business is heading somewhere. Don't just buy a third liner because it's moving. You must know why. You must establish ahead of time that the principle of buying in this is solid.
Okay.
Right? That way you can ride out a lot of the volatility.
Right, and you really do your research on those
You
companies.
have to, yes, because the volatility alone can really be a sense of dread every night sometimes.
Imagine.
Yeah.
Yes.
Your stomach's churning.
Exactly.
Is it going to just
Why did I
like
put that much
drop?
money? Yeah.
Maybe in time they start with the big boys and then they can put a small amount of their portfolio in there and not a significant amount.
Okay. We have another question. This comes from Joshua, who asks, how do you gauge if a company that is doing it, that has an IPO is a good buy?
All right, that's the tough part.
If everyone knew, right?
There are two things that happens inside an IPO. Is first that there is an underwriter who will help you try to get listed, and a lot of the information that comes out about the company comes from that particular institution. And it's really very one-sided because it's their opinion. You don't really get too many opinions out there until after it lists, of which brokers now are allowed to give opinions after. There is such a thing known as a blackout rule that until after the IPO, brokers are not allowed to be able to dish out any recommendations. So I can understand how difficult it is for them, at least for the customers.
Yeah.
Right.
Again, look at a company in its basic sense. If you don't have things for sure, run them by. Are they making good money? Do you think they have good prospects as a company business? Try to see what the feel is, if people are talking about it or not, because if nobody wants to be able to buy this, then it might not be too successful.
Okay.
So it's important that demand is backing that.
Okay, great. Thank you so much, Juanis.
So, my pleasure.
Send us your money questions via email or through Facebook and Twitter, and we'll try to answer them in our upcoming episodes or on our next Q&A Friday.
Juanis, Mel, look for gems.
That's right.
That was excellent. I really like that piece of advice. Well, that's our show today. I'm Edric Mendoza. Join us again tomorrow for more talk and tips so you're always right on the money.